Good morning. The truth about bank statement loans. Who's going to qualify and who doesn't? So, for business owners, freelancers, and 1099 earners, qualifying for a mortgage shouldn't feel like trying to fit into a box that was built for W 2 employees. And that's exactly why bank statement loans exist and why they've become one of the most powerful financing tools in the 2026 lending market. In the Medallion Funds, we see this every day. We see strong borrowers with real income, real assets, and real businesses that get declined by retail banks simply because tax returns don't reflect their true cash flow. And bank statement loans flip that script. Now, this guide breaks down who qualifies, who doesn't, and what lenders are really looking for in today's market. So, you may be asking yourself, what is a bank statement loan? Well, a bank statement loan is a mortgage that uses 12 or 24 months of business or personal bank statements to calculate income instead of tax returns. And lenders analyze actual deposits to determine qualifying income, which is a huge advantage for borrowers who would reinvest heavily or deduct expenses aggressively on their tax returns. So, who's going to qualify for a bank statement loan? Well, self employed borrowers 2+ years in the business. And this group can include business owners, independent contractors, gig workers, realtors, loan officers, consultants, contractors, investors with 1099 income streams. And lenders really what they want to see is consistent monthly deposits, as well as stable or rising income trends, and also a clean account history so there's not big insufficient funds payments or charges listed on the bank statements. So borrowers with strong cash flow but low taxable income, if your tax returns show very little income because of those write-offs or depreciation or reinvestment into your business, you're a textbook bank statement borrower. And these borrowers typically have solid credit scores, typically 620 to 680. 620 is the minimum for high leverage financing. And higher scores equals better pricing. And 700 plus is ideal for top tier programs. Borrowers will need to show reasonable reserves, and most lenders want to see 3 to 12 months of reserves depending on the loan size as well as the risk profile. So, who doesn't qualify for a bank statement loan? So, borrowers without self employment or 1099 income wouldn't be eligible. And if your main income is W 2s, lenders must use your W 2 documentation. Now, businesses with highly irregular or declining deposits will not get approved. It's something to be aware of, mindful of. And a few inconsistent months are fine, but a long downward trend is not. And there's a clear difference between the two, and that's something by talking with me we can analyze. But borrowers with also significant overdraft or NSF activity are usually going to get declined. And overdrafts tell lenders that the borrower is living too close to the edge. So new businesses under 12 months are not eligible. And there are some niche lenders who will allow 1 year in business, but 2 years is the typical industry norm. So if you do have 1 year, let's have a conversation. Now, how lenders calculate income. Here's the real formula that they're going to use. But banks look at your bank statements and they'll look at your gross monthly deposits. And then they're going to use an expense factor, typically 40 to 60%, unless a CPA letter is provided showing a lower income figure or a lower expense ratio. And then the net qualifying income is how they arrive at what they use for your loan qualification. So let's put a real world example together. Say you're bringing in $30,000 a month and you have 50% in expenses. Your qualifying income is going to be $15,000 a month. Now, this can dramatically improve purchasing power compared to tax return income. So, why bank statement loans are exploding in 2026 is our next topic. So, there's been a massive rise in self-employment, and there's a lot of folks that are getting let go of jobs, and that's one reason. But there's also a growth of gig economy income earners, And small business expansion in Texas and nationwide is definitely something that's happening. And banks have tightened their traditional guidelines, and investors who need flexible income documentation is another category. So the point is, for the right borrower, this loan isn't a backup plan, it's a competitive advantage. And here's the final takeaway for the day. Who should use bank statement loans? Well, bank statement loans are going to make the most sense for self employed high income earners, business owners who reinvest their profits, borrowers who want more buying power as compared to a tax return option, and borrowers who need speed and flexibility. And what they're not ideal for is borrowers with unstable finances, those that are dependent on W 2 income, and new businesses with limited history. So if you're self employed and you want to buy or refinance in 2026, this is one of the best tools in the market. And Medallion Funds can connect you to the right lender. That's what we do. That's it for the day. Please visit my website, billrapponline.com, for more resources and to schedule a consultation. Thank you for your time.